Good morning, everyone, and welcome again to this webinar, Net Zero Asset Management Initiatives. 1 year after the first commitments, where do we stand? My name is Aurélia Fenn. I focus on sustainability within the Asset Management Association, and we are glad to host this webinar. We'll start the webinar with a few welcoming remarks from AMA CEO, Adrian Chasman, and then we'll deep dive into an international perspective about the net zero asset management initiatives. What are the latest developments? What has happened during the past year since the first commitments were made? We'll then provide a brief national perspective and on where does the Swiss market stand in that regard, before deep diving into the practical implications of joining the alliances. And we'll then finish with the Q&A. So you have the opportunity to ask questions in the chat, but also after the webinar via email if you need to. And without further ado, I let the mic to Adrian for the welcoming remarks.
Thank you, Aurélia, and good morning, everybody. Welcome to this webinar. Just a couple of points from my side. First and foremost, it's very important that we have this webinar, and it's important that we have it now. And let me point it out a bit. If we take a step back 1 year ago in Switzerland, the Asset Management Association, we were in intense conversations with various political bodies, parties. The request to our industry, to the financial industry, to asset management in particular, was always the same. You have to do more. You have to do more to combat, to prevent climate change. And a lot of the proposals that we heard, they were unrealistic. They wouldn't make sense. At the same time, we had to acknowledge we have a responsibility as a financial industry. And we proposed to support the Net Zero Asset Management Initiative. And with this, not only come a nice message, nice words, but also responsibility to follow up, to live up to our promise. And this is why this webinar is very important. Second, you have read it in the media, in the newspapers. There has been some negative coverage on G funds, mostly on the insurance side. But still, what I hear is sometimes a bit an uncertainty, questions about the future of G funds. And I'm very grateful that we're going to hear a bit in an international perspective, big picture, to put things in an overall perspective, not just to focus on the negative sides, but also on the positives. And third, as always, in our industry, I welcome every opportunity, every platform to facilitate a dialogue. Today, I heard it from Aurélia, we have a Q&A. Please use that. We want a dialogue between the industry and G funds. We both, all of us, we can just learn from this. With this, let me first and foremost thank you all the speakers. We have Adrian Fenton here, we have Sonia de la Fuente, we have Aurélia here. Thank you very much. And hand over, I wish you all an inspiring and insightful session. And I hand over to Adrian Fenton.
Thank you for those kind words. I'll just share my screen right now for you all. Okay, so my presentation will be literally about what the targets appear right now since the inception of the Net Zero Asset Management Initiative. So for those who don't know me, I am Dr. Adrian Fenton. I work within the Institutional Investors Group on Climate Change, which is one of the founding network partners of the Net Zero Asset Management Initiative. In my role, I support asset managers and asset owners with net zero target setting and developing implementation strategies. Okay, so NZAM is an accredited initiative to Race to Zero, and it has a direct relationship to them. So for instance, this means that NZAM provides annual reporting to Race to Zero on the fulfillment of their requirements. Now, for those of you who don't know, Race to Zero is the UN body which accredits all of the net zero schemes, whether they be for cities, financial institutions, or whatever. NZAM also sits under the GFANS umbrella, although in practice this doesn't particularly mean anything other than some sort of annual information sharing between the initiative and GFANS, and also we loosely work together on some key issues, whether it be development of metrics or the development of frameworks. The figure on your screen is a little bit out of date, but it does a good job all the same of showing the sheer number of financial institutions which are now a member of a net zero alliance or initiative under Race to Zero. And they cover everything ranging from investors, insurers, to banks, to consultants. So why join the Net Zero Asset Managers Initiative? Because asset managers can obviously make net zero commitments outside of NZAM. But my answer to that would be that by joining, you would become part of a community of practice whereby asset managers resolve collective issues. Also, your commitment would be more reputable and comparable, addressing fears of greenwashing, which will also have the effect of improving your ability to attract capital from conscientious investors, particularly those which are part of the Paris-aligned Asset Owners Initiative or the Net Zero Asset Owners Alliance. However, to join NZAM, first you must be a member of one of its network partners, such as IIGCC, although if you are a PRI signatory, then you would not need to join any other network in order to join NZAM. It's important to note that NZAM is not an alliance. There are no fees, and there is no collective action itself. Instead, NZAM is really more a target disclosure platform, and all collaborative activity occurs at investor network level, such as IIGCC, and you are free to choose what you participate in. Okay, so now NZAM is a little bit over 2 years old, and now over 200 signatories have now set targets. In the next set of slides, I'm just going to highlight some of the macro trends that we've seen. Now, for those of you who are not aware, a major aspect of fulfilling NZAM commitments is determining the proportion of AUM which is to be committed to be managed in line with net zero. This enables investors to carve out asset classes or funds for which their targets are applicable. And so far, we can show that the average AUM committed under NZAM is 55% if you use the median average. It should be noted, actually, the most commonly committed amount is 100%, but more on this later on. We can see regional differences in the interim targets set by signatories. Now, it should be noted the majority of signatories are European, and they tend to commit much more of their AUM, especially relative to US counterparts, or counterparts from North America, more precisely. Although it should be said the few signatories from Oceania and South America do actually commit a higher proportion of their AUM than European signatories. Interestingly, despite European signatories being more numerous and committing a higher proportion of their AUM, they have actually committed fewer assets in total than their North American counterparts, so 9 trillion versus 12 trillion. And this is due to investors from North America being much greater in size on average. This graph shows a figure of the NZAM targets accepted by NZAM network partners. Now, I say accepted, but in reality, the review process eliminates targets which do not meet minimum expectations. They are not endorsed or accepted, as NZAM is not a quality label, it's just a disclosure platform. So in total, 230 targets have met minimum expectations as of July 2023. About half of these self-describe themselves as adopting the net zero investment framework, with relatively few qualifying as target setting protocol or SBTI compliant. About a quarter use a unique methodology, but this is in reality just a NZIF or SBTI derivative. And I'll go into that in a little bit more detail, because in reality, the unique and combination targets can just be simply squashed into the other target set of methodologies. And we can show how these have been used across regions, albeit with fuzzy boundaries. What we can see is that regardless of the market and jurisdiction, NZIF is the most used methodology. And reasons why include its flexibility, its comprehensiveness in terms of targets it provides, and also the implementation support provided through its regional networks. It's important to note that the vast majority of signatories which self-describe themselves as SBTI are in fact not SBTI compliant. And this is for various reasons. For instance, most NZAM signatories stating adoption of SBTI methodology lack the official SBTI validated SBTs. They also lack portfolio coverage, and also they lack use of implied temperature rise methodology when necessary. In reality, only 11 of the 49 investors which self-describe as using SBTi are officially SBTi as listed on their website. The SBTi will also be conducting a radical overhaul of their methodology, but at this moment in time, it's not clear when it will be phased into NZAM. But I can go into a little bit in a deep dive of NZIF, and that's because it's the most used comprehensive target setter methodology, which means it can yield important insights into how investors are setting targets. Now, this table shows the target types used or available under NZIF, and it shows them in a mirror image with the frequency with which they are used together. And what it shows is that the most frequently used target setting type is the portfolio decarbonization reference target, which is a top-down approach, versus then the portfolio coverage target, which is a bottom-up approach. And we can see that the least target type used is the allocation to climate solutions target, and this is due to regulatory concerns about what can count. We can also turn the database into a histogram where the horizontal axis represents a percentage AUM committed to be managed in line with net zero. And what we can see that this has been split into 20 buckets of 5%. The y-axis represents the number of signatories which fall into that bucket. What the distribution shows is a bimodal distribution with a peak around the 50% mark and a very large peak around the 100% mark. So this means that the mean is higher than the median, which means the data is positively skewed. So the distribution reflects the fact that asset managers tend to commit higher proportions of AUM, and the most frequently committed amount is to commit 100%. But this leads to a question which is always asked, which is, are the asset managers in this top quartile more ambitious than those in the bottom quartile? And I personally think that the data shows that the situation is quite complex. Because we can aggregate the data by quartile group, mean it's possible to know the amount of AUM committed in total by signatories in each quartile. And with that in mind, the 29 signatories in the first quartile have committed the lowest proportion of AUM, but together have committed just over 1.5 billion US dollars, an average, 1.5 trillion. US dollars, and the average size of the signatory is just over 100 billion. And those 29 signatories have on average 2.14 asset classes in their portfolio. The top quartile have committed collectively just over 1 trillion and have an average size of 6.2 billion in terms of their portfolio, and have typically 1.31 asset classes in their portfolio. And I think what this shows is that asset managers in that bottom quartile have actually committed more AUM than those in the top quartile. They also much larger, about 17 times larger, according to the median AUM, and they have much more asset classes in their portfolio. And I think that what this means is that we can't really say that those in the top quartile are more ambitious than those in the bottom. It could really be an issue of institutional complexity, frustrating attempts by asset managers to set ambitious targets in the first place. And this may simply be easier for smaller asset managers. We could also look at the number of asset classes which have been used within these targets. What this shows very briefly is the fact that most investors focus on listed equities and corporate fixed income relative to the others. And I think the reason for this is because when you join NZAM, you have 1 year to submit your target, and that can be quite a short amount of time in order to conduct all the analysis and get clearance from comms, legal, the board, etc. So most investors typically just focus on these two asset classes for now, but we are hoping in future for these to be readdressed. Okay, before I end, I'll just talk a very little bit, if I may, on fossil fuel policies, because it's such a controversial issue and it's sort of a question which everyone inevitably needs to ask. And I think the simple answer to this is that NZAM doesn't have concrete requirements for investors to have a fossil fuel policy, although it will ask investors if they have one and publicize the case. Instead, it defaults to target setting methodologies and the guidance they offer. And what this means is that when you're choosing a target setting methodology, you should be mindful of how it may complicate other types of disclosures you may make. Now, the target setting protocol, which is on its 3rd edition, does require alliance members to not provide finance to infrastructure assets whose ultimate purpose cannot be aligned with major net zero pathways. Now, the extent to which this would apply to NZAM signatories is probably not clear because they're not actually alliance members, they're just using their methodology. The target setting protocol does have associated oil and gas as well as coal positions, but and this can range from engagement with corporates, but also broad stewardship angles as well. As I said previously, SBTI are currently overhauling their methodology. It is not finalized yet, and currently is envisaged that there is a fossil fuel position to be at the center of this. Some of the implications of this is that it would require no new coal finance, except for permanent decommissioning of coal projects or companies. And although right now it's really not settled, so I don't want to talk about it too much. I would end by saying that NZIF does have some guidance. It does recommend that investors don't allocate additional capital to companies which are planning or constructing new thermal coal projects or associated infrastructure. And once again, the reason for this is because they simply can't be squared with net zero pathways. But because NZIF is a much more transition plan guidance rather than target setting methodology, it does have other pieces of advice, such as within asset allocation or optimization processes and within recommended disclosures. So I'm going to end my presentation there, and I'll happily answer any questions people have now or at the end.
Thank you very much, Adrian. I will follow. Thank you for this international overview. From my side, I will briefly complement with a few highlights on the national side. Adrian gave us the international perspective, what has changed at the global level when it comes to net zero commitment on the asset management side. For us, let's start probably in Switzerland, trying to understand why is net zero important for Switzerland. So first of all, it's important because Switzerland ratified back in 2017 the Paris Agreement, meaning that financial flows need to be compatible with net zero by 2050. That's the targets that Switzerland has also committed to back then. And a number of Federal Council reports, including the one from last year in 2022, include net zero as a goal for the financial industry. And most importantly, over the summer last year, the Climate and Innovation Act was voted for by the Swiss people, and it included in its Article 9 an objective that basically, it's in French on the screen, but that basically aims at making financial flows compatible with climate goals, and the climate goal of net zero by 2050 being one of the most important, if not the main one. So that's important for Switzerland, but that's also important for industry. And where do we stand in terms of the asset management industry in that regards today? So some of you may remember that last year we ran a study together with the other financial associations about taking stock of the adoption of G funds in the Swiss financial industry. We published numbers for the asset management industry, so pointing out to 1.4 trillion of assets under management being committed to NZAM. This represented in terms of assets currently, I mean, back then managed in line with net zero to an amount of 500 billion Swiss francs. This study was published last year, and what's important, where do we stand now? Three main points that we wanted to highlight. We've been tracking those numbers and analyzed them a little bit. So the total AUM committed to NZAM over the past year decreased by a third, so reaching now 1 trillion Swiss francs for 40 asset managers. So the number of asset managers committed to NZAM in Switzerland remain the same. There's been 3 new members joining, 2 have left the initiative, and 1 member got acquired. And so the reason for this decrease by 1/3 is actually, in terms of AUM, is mostly due to the impact of the Credit Suisse acquisition, which is those numbers are not included in this and the 1 trillion for 2023, which represented quite a significant number, and the rest is basically the rest of the decrease is mostly in line with overall market trends that we observed that we are observing in the market. So that's one. What the positive aspect, though, is that we can notice an important and a stronger level of AUM actually currently managed in line with net zero. So the initial targets represented about 38% in 22, and currently it's about 60%. So meaning that the asset managers actually committed to net zero are pledging a higher number of assets when it comes to the initial targets. So that means that as of today, we've got about 628 billion of AMAS members AUM that are currently managed in line with net zero, and that number is up by 18% since last year. So that's in a nutshell the national perspective that you wanted to provide. I will now pass on the mic to Sonia de la Fuente in order to really understand the key implications of joining and the practical implication of joining the alliances in terms of and that will I would hope answer a lot of your question if you are not a joiner or if you are thinking about joining those alliances. I'll stop sharing my screen and I'll pass on to Sonia.
Hello, everyone. Good morning. So as Aurelia said, I will briefly present some of the legal aspects related to this initiative. What are the legal consequences, if any? What are the legal risks associated with joining this international initiative? So on the first slide, you will see a short overview of the issues that will be addressed during the presentation. So first of all, why to join the Net Zero AM initiative? What are the potential benefits? Then what are the legal consequences of joining this initiative? How to implement it, because it's not only it's not only joining it, but it has some commitments attached to it, of course. Then what are the consequences if indeed a partner, a member doesn't meet these commitments? And what are the consequences of leaving voluntarily the initiative, as some members have done it, especially over the last year? And then I will conclude with some recommendations and insights. So why to join the Net Zero initiative? First of all, there is no legal obligation from a Swiss law perspective to join this initiative or any similar alliance. However, the Federal Council has endorsed the adhesion to such initiatives. What are the potential benefits? I think, first of all, the initiative has to be seen as a framework, as a tool to reach or to move to decarbonization of a portfolio, because typically now under Swiss law there is no concrete framework to help an asset manager that want to move to decarbonization to actually do it. So it's really a tool. So it will help to share best practices among the members of the initiative. As I said, it gives you a framework to transition towards a more sustainable investment strategies. It also provides guidance to set targets, interim targets to portfolio decarbonization. It also gives you access to a peer review of the strategy, the targets. And as almost all these tools that we can see, the standards, the labels, or these types of initiatives, it will encourage and enhance transparency and accountability. And it has also a sort of marketing value in some ways, as it will enhance your credibility as an active player in the area of sustainability. Now, what are actually the legal consequences of joining the Net Zero AM initiative? Because as I said, when you join this initiative, you made certain commitments with regard to engagement, to advocacy, to shepherding investment, to move to a net zero strategy. But however, it has to be made clear that the Net Zero AM initiative is not an association, it's not an international treaty, it rather falls into the category of soft law. It's more or less like a gentleman's agreement. So the binding, strictly legal binding nature of the initiative is very, very mild. So now what are the potential risks? There are threefold, really, as it's reflected in the news recently. First of all, there are some potential risks as regards antitrust laws, and is interesting to see that now the Net Zero AM initiative provides a disclaimer that you will see here on the screen, and it's basically a roadmap of all the behaviors that you should avoid in order to minimize the risk of breaching antitrust laws. The second potential risk is regards consumer protection laws and unfair competition laws. It really boils down to the risk of greenwashing claims. So as for all potential risk of greenwashing, it means that you should avoid misleading statements with regard to the participation in this initiative. It has any marketing communications, any contractual documentation needs to make clear what it means to be a member of the initiative. And the last potential risk relates to fiduciary duties. One of the commitments we will see with regard to joining the initiative, the members will commit to engage with clients and advocate for net zero investment solutions, which has some activism dimension that can be depending on how you will interpret fiduciary duties, and that really also depends a lot on each jurisdiction. But in a traditional understanding of what fiduciary duty means, it's very much oriented towards performance, not activism. So and now, especially when we see what is happening, the discussions around ESG at large in the US, we see that there is an increased scrutiny on the notion of fiduciary duties. And that is probably obvious to you, but the violation of fiduciary duties owed to clients amounts to a contract violation. So when engaging with a client to promote net zero solutions, of course, it has to be within the framework, within in compliance with the instructions of the client with regards to investment decisions. Now, how to implement the net zero initiative? the initiative contains a series of commitments that you will find in this table on the end in the next slide. The first commitment, it's based on engagement with the asset owner clients, engagement towards service providers, data providers. It means really that you say it's expected some active participation to really engage, active participation from the member of the initiative to put in place a strategy towards net zero. So as regards how to implement it, it requires some amount of preparatory work and analysis to set an operating framework and a timeline to identify what strategy the member wants to follow, what stewardship and engagement strategy does it want to implement, and also to identify reliable data providers. So basically it means to define an action plan and a realistic timeline. The second commitment, which is very much linked to the first one, so it's on the next slide. You will see it refers to setting interim targets. So the members will have to set interim targets for 2030. You have here all the details that on the first column, it really reflects what is provided in what is laid down in the commitment published by the Net Zero AM initiative. And for the implementation, you will have to identify here a methodology for science-based methodology for target setting. And here are a couple of examples that some of the members have chosen and are endorsed and recognized by the initiative. And also the members will need to define a disinvestment strategy or an engagement strategy with regard to fossil fuel investments. And there is a duty of disclosure within 1 year of becoming a signatory of the initiative to announce, to disclose what are the initial percentage of the portfolios that will be managed in line with a net zero strategy, and the methodology that has been chosen for the target setting. And also you can choose one strategy, but it can also be a combination of various strategies. The third commitment is to review the interim target at least every 5 years. So that implies to set a timeline for this review and also a methodology to assess the progress made. And finally, the last commitment relates to accountability. The signatories of the initiative will have to publish their TCFD disclosures once a year. And also within the first 12 months of joining the initiative, there is a series of information that will need to be disclosed. As I said, the methodology, the science-based net zero scenarios that have been contemplated, what is the policy in relation to fossil fuel investments, and then every year you will have to update this data and to inform about what has been done during the year under review. So basically, as I said, these commitments are threefold. It means it implies to set a strategy for portfolio decarbonization with interim targets, to engage with your clients and the partners, and it also entails reporting duties. Now, point 4 of the presentation: what are the consequences of not meeting the commitments made? Is there any sanctions? The answer is no. There is no penalty, at least based on the public information available. The worst case scenario will be an exclusion of the defaulting signatory if a signatory does not comply with the commitment to, for example, to declare the proportion of assets that will be managed in line with net zero, if no information is provided about the interim targets or the methodology, and there is an escalation procedure, because the defaulting signatory will first receive an initial notification asking the asset manager to actually comply with its commitment, and if there is no commitment during a 1-year period, then the initiative, the Net Zero AM initiative, can decide on the delisting of the defaulting signatory, basically its exclusion from the initiative. Then, of course, there is a sanction from a reputational perspective, because it doesn't give a good, of course, image of the company and its commitment towards sustainability. What are the consequences of leaving the Net Zero AM initiative? Now, based on a voluntary basis, if a member decides down the road that it doesn't want to participate in the initiative any longer. And of course, the question arises and should be answered in light of what on the news that you can read, particularly what's happening in the US, because we have seen that over the past few months, some signatories have withdrawn from Net Zero initiative, the Net Zero AM initiative, but also other initiatives, for example, regarding insurance companies. Vanguard, which is one of the largest asset managers, has left the initiative in December last year. There is in the US there's a lot of political backlash, which is because it's really a political discussion now that surrounds this initiatives. Some US authorities claim that there is a risk of breach of antitrust regulations and fiduciary obligations. So that's why maybe some members may consider leaving the initiative. So what are the legal consequences of it? A priori, there is no penalties or sanctions, as I said, because the initiative, it's very much a soft agreement. It doesn't mean very much from a legal perspective, but again, it falls into the category of soft law. So there is no legal consequences of leaving the initiative, except that if you leave it, of course, any reference to the initiative will need to be removed. You will need to update the documentation to make clear that you are no longer a member of the initiative, again, because to avoid any potential claim of greenwashing. Then there is a reputational cost. that shouldn't be downplayed or minimized. Some mitigation measures we need to be put in place. I would recommend to explain why the company, why the asset manager is leaving this initiative, as Vanguard has done. It left the initiative, but it has explained. It has reaffirmed its engagement to advance low carbon economy. It should be made clear, if it's accurate, of course, that even if an asset manager is leaving the initiative, it doesn't mean that it dismisses the goal of the initiative, but it has decided to pursue the goals by its own means. But again, it shouldn't be minimized, the reputational risks or costs of leaving this kind of initiatives, which has a large international and to some extent a prestige attached to it. Finally, to summarize some recommendation and insights, as said previously, the initiative should be seen and used as a tool and an efficient roadmap to achieve portfolio decarbonization. An asset manager should probably, or I would recommend to have a risk-based approach, meaning that the implementation of the commitments which belong to soft law needs to always to comply with the applicable laws and regulations, because these laws and regulations, they are associated usually with sanctions and with legal sanctions. So the commitments need, of course, always to comply with the law that applies to the asset manager. With regard to the potential risks, first, consumer protection and unfair competition laws. Again, basically, it refers to greenwashing risk. Again, make clear what being part of this initiative means, a clear communication on the goals of the initiative, the interim targets applied, the methodology used. The transparency should be the key word here. For antitrust laws, the Net Zero AM initiative disclaimer on that I reproduced in slide 4 can be used as a roadmap for all the behaviors that should be avoided, to sharing confidential information, agreeing on certain strategies with all the partners. This kind of agreements needs to be avoided in order to be compliant with antitrust laws. And finally, with regard to fiduciary duties, as I said again, any advocacy and engagement that wants to be implemented by an asset manager needs to be in line with the mandate that has been granted. So, of course, even if an asset manager wants to promote net zero strategies, it has to always comply with the instructions that it has received. Thank you very much. That was all, and of course I'm keen to answer any questions that you may have. Thank you.
Thank you very much, Sonia. It's now time for the Q&A. So maybe a first question that we received via email, and I let our panelists, Sophia and Adrian, whomever wants to go first. Maybe it's more for legal questions, so maybe it's more for you, Sonia. What are regulatory expectation or any supervisory body from compliance function of entities that have signed Net Zero Asset Management Initiative in the context of its implementation, oversight, monitoring? So the regulatory expectation from the client side. I think you mentioned it also in your presentation briefly, but maybe you want to go.
The regulatory expectations, well, from a Swiss legal perspective, currently there is no obligation to join this kind of initiatives. So typically, there won't be any. There is in the guidelines from the AMAS, for example, or the recent directive from the ASB, there is no duty or expectation that a member will be part of this kind of initiative. Now, internally, the asset manager should, of course, put in place some monitoring to be sure that the targets, the strategy is actually followed, because at the end of the year, our reporting will need to be issued on these issues.
How do you see the role of asset manager in the context of wealth manager, in the context of net zero?
I mean, I think if you look at the NZAM commitment statement, it basically highlights in a sort of very broad way what is expected to be a wealth manager in the context of net zero. And I think in summary, that means engagement, well, restructuring yourself internally so that you can integrate your net zero goals and objectives into allocation processes or developing the necessary policies. So it's about getting the right internal structures first and foremost. Then I think the NZIF really sees two broad levers to this, and that's trying to shift the alignment of underlying assets, predominantly focused on engagement. Well, that could also be direct management if they're real estate or sort of infrastructure holdings. It could also be change in sort of screening processes so that we're sort of allocating capital to parts of the economy which are needed for that net zero transition, and not abandoning all other investments and working with them, delivering value for ultimately for clients. I think the next phase in all of this will be the expectations of our wealth managers with regards to stewardship. And that's the broader engagement which wealth managers can have with data providers or with national policymakers, so that the underlying economic policies, the data, the tools, which all underpin net zero investing are there, which enable the targets to be realized.
So given that Switzerland doesn't have the same Republican woke agenda climate as in the USA, do you expect the number of NZAM signatories to remain stable in Switzerland? Maybe I think I can provide a brief one here. I mean, we don't have a crystal ball, so it's very difficult to obviously know what's going to happen. But from what we've seen over the past year, at least, is that the number remains stable. Some people join, some people leave, at least in Switzerland. So as I said, 40 AMAS members are currently committed to net zero. So the kind of US context didn't for now is not yet at least reflected in the Swiss market. The markets are so very different, so I wouldn't expect the Republican agenda to drive obviously the Swiss one. And we could, but who knows? This anti-ESG movement started in the US. We don't see the same kind of movement here in Switzerland, but who knows how and in which form it could happen. It's still unclear. So for now, we don't see this happening, but it might as well take a different form, if any, in the future. Maybe Sonia, you have a view also from looking also at the Swiss market.
Yeah, I think you summarized very well, Aurelia. I think indeed now all this discussion, it's very much a political discussion about leaving this sort of initiatives. based on the backlash that generally ESG strategies receives at large in the US. We don't see this sort of backlash in Switzerland. So, but as you said, we don't have a crystal ball, so it's difficult really to anticipate how will be the future with regard to this sort of these initiatives. But for sure, just to when I spoke about reputational cost of leaving it, it's true also that investors, much more investors are expecting that asset managers take concrete measures. So when you leave this sort of initiatives, it doesn't give a very good sign. So that's why mitigation measures need to be put in place.
Thank you. And maybe a final question before closing. Maybe to you, Adrian, how do you see the interplay with SBTI? You mentioned different methodologies also in your presentation.
Yeah, so we do speak to SBTI and CDP, which are a component of SBTI, are one of the network partners of the Net Zero Asset Managers Initiative. So there is discussions there. But I think that they're trying to do fundamentally different things, because for me, the SBTI is much more of a quality label, so that when somebody says they have a validated SBTI target, and some asset managers in Switzerland do have that, it really comes with it all these sort of positive associations. Whereas the Net Zero Asset Managers Initiative is more of an expression of an asset manager that they want to be part of a growing journey, that they understand the importance of climate change and the effects of it on its clients. And it wants to gradually, over time, try to align itself with the goals of the Paris Agreement. But in order to do so, it needs a certain enabling environment, such as that provided by national policymakers. So in some sense, saying that you're part of the Net Zero Asset Managers Initiative says something about what you're trying to achieve, but it doesn't really say something about what you are, because we have some signatories who have committed less than 10% of their AUM to be managed in line with net zero. Now, for us, that's fine, because NZAM recognizes that all investors start from different positions, but they all want to go to the same journey. Whereas if you're part of SBTI, then you sort of have to be at least pass a minimum threshold of where they want you to be. And so they are sort of fundamentally differently. In a way, SBTI is a bit of a gold standard, whereas NZAM is sort of an investor movement, so to speak, although a movement with no coordinated actions.
Thank you, first of all, to all the speakers, to Adrian and Sonia for this for their participation and for their great insight for this webinar. I've learned quite a lot, so I hope you did as well. The presentation will be made available to all participants after the webinar, and this webinar has been also recorded, so it will be also available on our member area part of the website. If there are any further questions after the webinar, please do not hesitate also to let us know, and we will transfer them to the right person so that they get answers. But we really hope that the webinar helped you to get a stronger understanding of where we stand in terms of the Net Zero Asset Management Initiative. A way to continue the dialogue and the discussion is to join us at Building Bridges in about 2-3 weeks from now, where a lot of talks will be happening in January about net zero, about climate, and a lot of different sustainability related topics. So we're really looking forward to see you all there. We also have, and I'm putting this event out because it's really linked to the topic. So it's about Paris-aligned financial flows, the data, the standards that are linked to that. We are co-organizing this event with Swiss Banking and the Fondation Genève Place Financière, and so we'll definitely talk more about the same topic in the form of a workshop. So you're all welcome to attend. Obviously, we also hear more on this topic in the months to come in the context of the COP as well. So thank you again for joining. I leave you with this note, and thanks again to Sonia and to Adrian for this great for their great insights. Thank you. Have a good day.